What is going on, guys? Welcome to the Traveling Crypto. Hope you guys are having a great weekend, regardless of what the charts are doing. So when I started up my computer and I was thinking of a topic or a way to present today's market update to you guys, I thought about something. Based on the community in the Discord and based on the people that watch the videos and leave comments, I get the sense that a lot of you, a good portion of you, haven't actually been around cryptocurrency for a long time or cryptocurrency trading for a long time. And a lot of you have actually gotten into the market as recent as December or January of this year. And prior to this, you haven't had much trading experience. So your perspective on trading can be a little jaded, and you actually probably have a discouraging perspective on cryptocurrency because we've been in this downtrend that you see here ever since January or December of last year. So since we've been in a constant downtrend, how would you guys gain a different perspective, especially if you're not used to trading and haven't really been around markets for a long time? How would you gain a perspective that is actually more realistic of what's going on? Well, for that to happen, we have to take a look at more historical data, right? This is just a one-day chart. This is the chart that most of us look at. We do look at the markets on a day-to-day basis, part of it because it's a hobby, but also partly because we are obsessed with our portfolios and we want to see what's going up and what's going down. I can tell you from my time in trading stocks that is not normal, right? I mean, unless you're a day trader or a swing trader, and that's really your discipline. If you're just somebody who wants to hold certain assets and see them grow over time, checking them every day is not normal. So I'm hoping to give you guys a bit of a different perspective today. And by doing that and by looking at more historical data, I can provide you with that sense or that new outlook on where we truly are in the market. So this is a one-day chart. Obviously, we see this descending wedge pattern that we pointed out before. This is typically a bullish pattern. Also in a downtrend, this is a sign of a reversal. But if we don't get the volume, as I said previous, we could actually break out of this pattern, out of the support, and continue to fall. But this is why it's not really a bad thing if we fall in the short term. So I'm going to introduce you to the Bitcoin weekly chart, which we've looked at before, but we haven't looked at as far back as Bitcoin's inception on the charts, right? So this goes as far back as 2011. And I clicked on log scale here. Log scale basically just cuts out all the noise and provides you with a more accurate sense of what the trend is or where the trend is going since the beginning of time, really, for Bitcoin on the charts. Of course, there is more historical data than this, but on TradingView, Bitstamp goes all the way back to 2011. It really depends on when Bitcoin hit that exchange. So this is what it looks like actually for Bitcoin since 2011. And you guys don't have to be chartists or technicians to know that this is one steep uptrend. It's not even a casual uptrend. There really isn't much gradualness to the rise of Bitcoin, right? You'll see that it's a rather steep uptrend. But what's going on here, and this is why I wanted to subject you guys to this chart, is you'll see that it's really just a series of rallies and consolidations, rallies, consolidations. Here, we can even draw it out, right? So you have this rally and then a bull flag and then another rally, and then you have a larger bull flag, right? Before we started to rally again, and now we are rallying upwards again. And each period of consolidation or correction, let me just remove all this stuff. Okay, so each period, each rally, right, was followed by a period of correction. And you'll see with each one of them, you can actually measure them using the measure tool. The first major one that we see here in 2013 was around 56% before it started climbing again. The second one that we see here was around 77% before it started rallying again. And currently, this correction that coming from the December highs that we saw where it hit 20,000, we are currently in a 67% correction. So it's really within line of what we've seen historically with Bitcoin, right? And even if this dips further, so say we do match the previous correction of 77%, 77% from previous all-time highs is for around $4,300 for Bitcoin, right? So if we're looking at the day chart and Bitcoin hits $4,300, we're all panicking. However, in the grand scheme of things, it would be in line with previous corrections, right? It's within the range of previous corrections. So hopefully I can even clarify this a bit more for you if we remove these measuring tools real quick. And we move on to Elliot waves. And using Elliot waves, especially on long-term charts like this, you can get a fresh and transparent outlook on the true movements of the market, right? So we'll start back all the way back with the first amount of data that we have in 2011 and draw our first 5 cycle here, right? Followed by the correction. And then our next 5 cycle. 1, 2, 3, 4, 5. And then we are currently, based off of this, if we draw it this way, right, we're currently in a corrective wave, right? And we're on the C wave of this correction wave. And in a typical 5-3-5-3-5 Elliott pattern, right, you have 3 impulsive moves consisting of 5 points, which you see here in yellow, and we have 2 of them drawn out because this one is not yet drawn out. And then you have 2 corrective moves, which are labeled here in green. Now, here is the interesting thing, right? So if we take this one up to a higher degree, right? In Elliott waves, you can have up to 9 degrees. And I don't want to make this a tutorial about Elliott waves. I really just want to give you a sense of what's going on in the market, or why a drop, like if we do see a drop in the daily chart, why that could on the long term really isn't the end of the world, right? So if we go 1 degree above, if you call this the intermediate cycle, right, then we can have a larger one that's a primary cycle that encompasses what is going on within it. So the larger cycle can just be for now, based off of this, can just be a 1 5 wave move until obviously we get more data in the future. So here's the larger cycle. 1, and I'll draw it a little bit above so it's easier to see. 2, 3, and this is currently we're in the 4th wave, right? And so this, we don't know how far down it will go. But essentially, as long as we don't go below this 1 here, right, then we're still within the rules of the Elliott impulse wave. So we could just hypothetically draw out future movements. But this is 1, and I'll change the color actually so you guys can see it. And I might remove the lines actually. Change this. Okay. So these red circles are that is the primary pattern, right? And everything the 5-3-5-3-5 would be going on within that larger primary pattern. So this is what I was saying, is that the market looks like it's moving in this direction, creating this primary Elliott wave in this way. So that means that we could drop to right around maybe anywhere between 4,000 and 6,000 before completing this 5th wave here. So we are currently in this 4th wave of this primary impulse. Now, certainly this correction, this ABC correction, doesn't have to last that long, right? We could actually we could be at the bottom of that correction and then continue on from here. Who knows? But I just want to make sure that you guys know that if we do drop further, it's not the end of the world long term, right? We are still on a healthy uptrend since the beginning of this chart, which goes back 7 years to 2011. So the bullish scenario, the immediate bullish scenario, says that we are done with this correction and we will continue on. And this will conclude this larger primary fourth wave right here, and we will continue on from here. Or the bearish scenario, and to me, this all depends on volume. And if you've been following this channel for a while, you know that I'm harping on this like there's no tomorrow. It's actually getting quite annoying, to me at least. I'm sure it's getting quite annoying to you. But if we don't get any volume, we could actually see us drop further before completing this correction. So this C wave, this corrective wave here, can actually drop further. Down to levels between 4,000 and 6,000 before then springing back up to complete this fifth wave. And the fifth wave, obviously, it's really far in the future. So making a wild proclamation as to what it is futile, really. But you can use something like the fib retracement to give you a good idea of what the next level up will be. So if we use a fib retracement on this long-term chart here, and go from the beginning of time, the lowest of low, to the highest of high, you'll see that the 1.618 fib level, which surpasses the all-time high, right? It's the next level up based on the Fibonacci ratios, is around 32,000 or 31,755. So that is actually a good marker for the time being. Now, obviously, I'm sure you've heard, if you follow crypto news at all, you've heard of a 40,000 Bitcoin, a 50,000 Bitcoin, 100,000 Bitcoin. You've heard it all, but I don't really deal in hyperbole. I like to go with what the evidence is providing us at the moment and try to draw conclusions from there. So for me, this would be the next level that we would shoot for after breaking all-time highs. This could be in a year, this could be in 2 years, this could be in 3 years. Really, it just depends on. We can't really predict volume, especially in a market that is young like this, right? We don't have a sense for how much volume is coming when. A lot of us thought that we'd have some institutional volume by now, but we haven't gotten that. So the volume is abysmal, and the market cap is currently, it's unchanged really over the last week. It's right at around 281 bill. Not great. So it really all depends on volume. Another reason that we could actually drop a bit further than where we are now, if I clear this, actually, let me just hide all these drawing tools, is there is a head and shoulders pattern that is forming here. Here's the, I guess it wanted to bring back all the drawing tools, but here's the left shoulder, here's the head, and here is the right shoulder, actually, right? So a head and shoulders is actually a bearish pattern. Let me see if I can hide these using this, actually. I'll keep the fib and hide the rest of this stuff. Okay. So yeah, head and shoulders is actually a bearish pattern, right? It's not great for if you do see it, especially if we're on an uptrend like we are here, at least looking at the longer term chart. It is a reversal pattern, meaning if we see it on an uptrend, we could reverse downwards. Now it could fail. It doesn't mean that we have to go down, but we do spot it here. On the 1 week chart, it's kind of a slanted head and shoulders pattern. And in order for this to be a true head and shoulders pattern, we do need to see a breakout below the neckline. So if we don't see that, then this pattern will have failed, which is a good sign, and we can continue to move up. If we do see a breakout below the neckline, then we could fall down to those levels that I mentioned before jumping back up. But the long-term outlook of Bitcoin is bullish, is really bullish. I mean, this market is, we do call it a young market. And yeah, I guess 7 years worth of charts is pretty young, but it's not like it just sprang up yesterday and we're, trying to assess whether this is just a tulip problem, right? Like the old adage that tulips at one point were, worth more than gold, and then people realized that they're just flowers that die, and now there really isn't a tulip market. I mean, there is a tulip market, but not, it's not in line with other commodities such as gold and silver and diamonds, etc. So, we have had time for this, for Bitcoin to draw itself out on the market. It's not like it's something that just sprang up yesterday. And you can actually compare this chart to other long-term charts. So if you want, I pulled up the gold chart, and you could see this is the gold chart since 1998. It follows the same pattern, really, because it is a market of a commodity. So you do see rallies followed by consolidations or corrections, right? And you'll see here that there is a major correction that occurred with gold spanning all the way back to 2012. We do see a dip before we will eventually see a rally again. This is Amazon stock price. Same thing. You do see a rally here. There was a major crash. This was the stock market crash, the dot-com crash, and this was the crash of 2008 following the housing market. But either way, you see a rally, crash, or correction or consolidation, followed by another rally, followed by another correction, etc., etc. And we'll take a look at one more. This is the Dow Jones Industrial Average. This is going all the way back to, I think this goes all the way back to the 40s. But same thing, really. You have periods of rallies followed by corrections, followed by rallies once again. So when you take a look at Bitcoin's daily chart, don't really fret if you do see this. You came in, most likely, a lot of you, I don't want to generalize all of you, but a lot of you came in here, right? And the reason you came in is because we did hit these levels, and these were unprecedented at the time. So the media, Bitcoin was everywhere in the media, online, mainstream media, etc. So rightfully so, you were probably excited by that and wanted to enter the market. And now all you've known ever since then is a decline from there, right? All you've ever known is a period of decline from there. But take a look at the larger picture, right? Take a look at the overall picture. It is not that bad. And it's if we do see a decline from here, fine. But history of other markets, as well as the patterns that the charts have shown us of Bitcoin, show that this correction or crash or dip, whatever you want to call it, is actually normal, and we will most likely see a rally from here, followed by another correction at some point in time. That is it for this video. If you got anything out of this video, leave a comment, hit that thumbs up, and subscribe. Hit that notification bell. Join the Discord for discussions like this that we have daily. Join the Patreon for the weekly crypto report and the trade alerts. I will be giving away some crypto at 20,000 subscribers. We're close. But the way that, crypto YouTube has been going, a lot of you have checked out already. But yeah, don't fret. Stay safe out there. Peace.